Good afternoon, everyone. Welcome to the PivotBoss Monthly Market Outlook for November 2020. I am Frank Ochoa, aka PivotBoss, also author of the book Secrets of a Pivot Boss, and welcome to the Monthly Outlook. Very excited to have you all here today. We have a very packed slate here of topics that I'll be talking about, so I will be going fairly quickly to keep this in a timely manner. I usually like to get these around an hour or less if I can. It makes for a better, quicker playback for those that are following along that can't join us live. And we have a lot to cover, so usually you can go back and rewatch it and get all the tidbits that you'd like. But we have several topics here to talk about. We're going to be talking futures here. We'll talk a little bit of seasonality. We'll look at some of the key stocks that people really have a lot of interest in, and we'll also look at some swing buy and short candidates, and we'll go ahead and get started right now. Number one, a few of the things that we looked at in October panned out pretty well. We did look at a lot of different ideas. Obviously, October was a month where we had a big swing up and then a pullback. Some of the ideas that we had early in the month were things like Zoom, for example, with a higher value relationship, trending up. We were looking for any pullback into the pivot range to be a buying opportunity for a push higher into the month. You can see here it didn't quite get down into the pivot range, but it did hold and explode into new highs into that month, and now we're pulling back. That was a really good buy the dip candidate for the most part, higher value relationship. At the moment, we're seeing a pretty strong high with a strong low right now. We had a gap outside of yesterday's range and value, a big pullback that held the previous month's close and low. This one is one of these opportunities that looks like it's gearing up for another push higher into about 520. That's the midpoint of the previous month's range. That's 522.93, and that's going to likely be the target there that you're shooting for on this short-term swing idea. Usually anytime you have that impulse sell-off, which means you get that strong top and you auction lower until you find a pretty decent strong bottom at an edge, then when you start to see that strength off that low, the tendency there is for a bounce into the midpoint at of that impulse move. So 523s could be ahead here, and we're currently trading 483, so there's still quite a bit of upside points there. Now anytime I talk about a short-term candidate like this, the thing I'm looking for is that midpoint here, very important at 470. For the most part, price needs to continue to hold above that midpoint for a shot at continuing higher. If at any point over the next day or two or three, price were to close below 470, it kind of breaks this idea. So it needs to continue to hold 470. 470 is also kind of the entry opportunity. So you could be looking at a plus 50 here on a pullback into 470 and a rally into 520. So that could be a pretty solid move there on a short-term swing basis. Another one we looked at was UAA. That was another one here that had the potential to see a breakout move. One thing I liked about this one last time around was the fact that this one had developed a big, large rounded bottom here. And that rounded bottom led to, for the most part, the explosive move to the upside right here. Boom, right? We had a very narrow pivot range here and a higher value pivot range. We talked about that, and I mentioned if price can start pushing through that $12 zone, it opens up a lot of upside space. And you can see last month very, very bullish for Under Armour here as it rallied basically from 11 bucks to the current high here at about 15 bucks. Pretty big move. Now you have a higher value relationship heading into this month. And again, any pullback could still be a buying opportunity for a continuation higher. So this one is still a good move higher for a move toward 16.75, maybe even as high as 17 bucks. But again, that's going to be a very nice target there to shoot for down the road. You have this low into that target zone right there, and price could pull back even as deep as the midpoint of the previous month's range. But this is one we talked about as a long-term target here, or long-term idea where price could, for the most part, pull back and then continue higher. So this could be a very nice multi-month move where not only does it continue higher here into 16 to 17, but perhaps it returns all the way back to value up above at 2082 over the course of the next few months. One thing we talked about this one as well is the fact that anytime you get accumulation on these lows, right? These accumulation on these lows, that's multiple months of accumulation. 1, 2, 3, 4, 5, 6 months. This was only a 1 month breakout, which means we have another 2, 3, 4, maybe even 6 months of trending price action that could take us all the way back up to the top end of the range, and that's going to be at around 22s. So again, very, very nice the way that's playing out, and we could be looking at more strength ahead. So that was a good one from last month as well. Another one we talked about was MA. This is Mastercard. Mastercard was a short candidate for us, and man, it really, really dropped pretty sharply. The reason we had this one short, again, we had an inside month here, narrow pivot range inside the previous month's range. It had a sharp turnaround and was starting to show initial signs of weakness here. You see also the bearish outside day here. It did squeeze one more leg higher, and then it got crushed to the downside and dropped into recent lows at 280. That was a huge move right there. And again, that was one of the few short candidates that we talked about. Another short candidate we had last month was also McDonald's. This was mostly based off of the weekly chart. The weekly chart having a squat signal up at these highs, and right now not showing on the chart here, but basically a squat bar here in the zone here, a couple of squats, and that can usually be an indication of a short-term top ahead of what could be a reversal. So you can see last week a huge down week. This is the weekly chart, and it also occurred off of those recent highs. So you have these highs here, fell back below it, and now you can see price is holding right off the top end of that range. If price can't hold 210s here, we might see a bit more downside ahead for this one. So 210 about right there. If it can't get above 220, 225 here pretty soon, we might be looking at a bit more weakness, say down into about 190. So this one's showing some early signs of weakness on the weekly chart. You've definitely seen this thing clean out here already in the previous week. Now with this inside week here so far developing, perhaps more downside could be ahead. So those were several candidates there that we looked at last month that did quite well. We have several more here to look at here today, but we're going to go ahead and start over here with the futures now. I did want to talk YM. So the YM here, first of all, today's session was tremendous, right? In terms of the size of the ADR, the size of the day's range. Additionally, the percentage gain for the NQ, 5% gain. I think it's finishing here at 4.87%. That's huge. Today's range in the YM, 1,201 points, which is 200% of average range. You also see that the NQ was 228% of average range. The ES, 238% of average range. RTY trading at 230% as well. Just enormous ranges today. So the market likes something with regards to the election. Perhaps a Biden lead right now with a Senate controlled by Republicans again could be the way to go here for a broader market expansion. But that pretty good move here. Now, this spike that we've had over the last few days, can it last? That's going to be the question here, because for the most part, we've put in a strong top, and then we put in a strong lower high that led to an impulse sell-off. Now we have another spike here that's come into play, and you know, if we start to see a little bit of a topping pattern here, is this going to be a lower high? Is this going to develop into a lower high that perhaps returns price back to value? Does that then begin to turn into a rounded top? Do we break through value? Because then that would maybe auction price back to the bottom of value, right? And that could be tremendous, right? So this is going to be something to keep an eye on as we head into the end of the year. As of right now, we have great ranges at these tops here to keep an eye on. But the big deal here is this weekly chart, right? Look at this weekly chart. This is something we've talked about for a long while. The expanding nature of this weekly chart looks something like this. looks something like this. And while we haven't quite taken out those recent highs, we're kind of sitting right here. You know, do we kind of squeeze a little bit more and take out those highs, or is it going to start to take out 26K and open up a bit more weakness towards, say, 23K? That could be an easy drop into that zone and then still be bullish inside this kind of D-shaped profile here. This is going to be something that we'll continue to follow because, again, those expanding ranges, they are very, very reliable at times because, again, once a market has expanded to the upside for quite some time, it tends to then gyrate at these highs, taking out higher highs, then going out there and taking out lows, then taking out highs, then taking out lows, and it's just shaking everyone out. If we were to drop, again, 25K would be a big near-term level. 23K would be about as low as we could go in a near term without it really falling off the map, right? If it can continue to hold 23K overall, I mean, this thing still has the potential to see an overall break to the upside down the road, which could be tremendous. But right now, again, keeping an eye on this expanding range. Do we get a little bit higher and get above those highs? And if so, what does that mean moving forward? Do we take out the low, or does this thing just continue higher? Typically speaking, as I've mentioned in the trading room at times, when you have a transition of power from one party to the next during a U.S. presidential election, there can be a resetting of the scales a bit. So there can be a bit of a discount here that happens, resets everything, and now we're ready to go for future economic expansion. So this is just a range that I wanted to talk about that we can continue to watch here from a longer term perspective. Now, when we're talking about something like the NQ here, we've got ourselves a phenomenal key range, and that's going to be kind of the theme here for a lot of these futures contracts. The key range is so super important, and that's this impulse move that happened here. You got that high back at the end of, or at the beginning of September. We got a significant pullback here that gave us a strong low, and then it snapped back to this midpoint. And that gave us the edges. That's the high, that's the low, that's the mid. And you can see how price has been trading inside those ranges now, fading off the 25% level. Look at today's range. Just a significant size range right there. Huge, huge day. Now, this range, this key impulse move right here, and that key range that it gives us there, is significant on a longer term basis because it points to 14,274 as an upside target down the road. Now, when that occurs, we don't know, but this is only 2 months in the making. Now starting its third month, it could continue to build energy and explode to that target heading into the end of the year. That could certainly happen. But oftentimes, my favorite trade, as you very well know, is for price to drop first below the key range low. Right? That's the key range low. To drop below it, take it out, and then get trapped down here. Get bears trapped down here, and that's right into the LVN, right into a rising 200, and from there, that might provide a bounce back to the mid, and then across the range into those upside targets. So the ideal entry from a longer term perspective here would be for a drop down into this zone here. Call it 10-200, 10-300. Into that LVN. If it can get into that zone, that could be a huge move, right? From 10K to 10-300, and then you're rallying into 14K to 14-300. It could be a 4,000 point move, basically a 40% gain on the NQ just from a 10K to 10-300 bounce all the way up to 14,000 to 14,400. So huge move potential here. And again, I love these key ranges because give it long enough and you will be at these targets at some point down the road. And the goal here is to identify where the best entry point is to allow ourselves a chance to get to those targets. So again, keep an eye on this key range here. It looks phenomenal. It occurred after a recent push higher. We've gotten great energy in here. We could continue to see development of this range, But overall, the goal is to get this thing up to 14K at some point over the course of the next several months. And if price can drop first, it gives a very good percentage gain here into those targets. So that's the NQ there. Again, the ES is very similar. You can see the key range here that's developed in the ES. Key range high 3587, key range low here right around 3200, and then a bounce back to the midpoint trading around 3400, right? That's a very good key range. And if we look at the edges here, you know, if price were to drop down below this key range low, you have this LVN right there that could be in play. That could be between 3100 and 3200, and that could be a trap all the way to bring this thing to 4K. So 4K is the upside target for the ES down the road. Again, where is the best entry here? How are we going to negotiate an entry to allow us to ride a move into that target? And again, usually, if price were to drop first below this key range low and get trapped, it then provides an opportunity to rally. And you don't really have to look much farther than just a few months ago. If you recall, we had that impulse sell-off here to begin June. We got ourselves a key range. We talked about this, the exact same idea. I even talked, hey, if we pulled back into this zone, this is the best zone. It didn't quite get there, it got close enough, and then it took off and hit those upside targets and got the 100% target here at 35.38. So this just happened a few months ago. The difference here is this is a bigger range here with more profit potential down the road. So again, we've already seen this play out here. Perhaps we can see it play out here as well into that 4,000 target, but that's the goal here. Down the road, is this going to hit 4,000 by the end of the year, by the beginning of the year, or sometime in Q1? How's it going to play out? And again, can we get some sort of really great kind of shakeout move that leads to a solid rejection and then a bounce higher? So looking for something, say 31 to 3200 and a move into 4,000. So that could be a huge move somewhere along the lines of 30 to 35% increase as well from those lower levels. So that could be tremendous. Now over here, if you're looking at gold, I wanted to talk gold right now. Gold has some really good potential as well. This is one that we've been talking about a little while. It's kind of gotten really quiet. It hasn't really done a whole lot. What we have seen is price mostly trade in this downward sloping manner. And today was a day where it actually showed us a little bit of juice here, where it kind of dropped below the previous session's low right there. It rejected that low a couple of times. It held on that low a couple of times and bounced up to new highs. Briefly a bullish outside day. It did give up a little bit of its gains at the end of the day, but this type of day can usually be a precursor to a breakout ahead. And if this were to break out, we could finish the month somewhere back toward 1981.70, and it could be a pretty quick move. The thing to continue to watch here is this lower value relationship here on the pivot range. This thing took the previous month's close bid and pushed price through the midpoint, through the top of that pivot range. And then today, the whole thing got dropped through the bottom of the pivot range, but by the end of the day, again, closed back above it. That's pretty strong right there, and reminds me of several days that we've had in the past here. And we looked at this earlier in our trading room, but it reminds me of this day right here, where you've had this range for several months, and then you get that failed low right there, and it was the failed low, the shakeout leg, just before it exploded on a huge 1 to 2 month rally. The other time it happened here was right back here, where we had this range as well. You can see downward sloping, very similar, and then right here it had a very bullish thrusting bar after a sell signal and exploded to the upside there. That got the ball rolling to the upside, And if you scroll back another leg here, again, a very similar downward sloping kind of channel, a bullish outside bar there happened, a failed low, just like we're seeing today, and the thing exploded for a huge move. So if you look at this right here and go back, that's kind of your blueprint for what we're looking at right now. It's a downward sloping channel that really has kind of gotten people to lose interest, but at some point, whenever they turn the lever there, it's going to just explode to the upside, and that could be a huge move, even just to get to the key range high up to 2100. But beyond that, it could be even more significant, because the upside target takes us as high as 230420. So 2300 could be the upside target ahead. That is a very good, high quality target that could be reached, sometime over the next 4 to 6 months, perhaps even quicker if it wanted to. But the key thing here is this low. That's the key range low. I mentioned earlier this a couple of months ago, or I guess that was the end of, that's the end of September, that this was the zone that was the best ideal entry, kind of like what we're talking about right now in the ES and the NQ, and it popped higher. It's been trying to hold the bottom of the key range. Right now it's still doing so, and if it's holding the bottom of this key range, then the midpoint becomes a very good magnet above. That's 1981.70. And if it can get through there, you open up the top and start working toward those upper targets up above. Again, 2100, 2200, and 2300, the next major targets above. And this one, I believe, is getting very, very close to seeing that move. Maybe today was the day that it's showing that it's going to start the move, but it's already done pretty well to begin the month. We'll see if this is it. If not, then we're still kind of doing this until we get that breakout. So we're still kind of in the framework of this move, but I believe that gold is building for a move to 2200 and then 2300 down the road. And right here at these lows, 1870, 1850, in that zone, I think that's where bulls are currently absorbing here and accumulating for potential squeeze. So this one could be tremendous to the upside here down the road. Another one here that I wanted to talk about is DXY. And I wanted to do this one from two different perspectives. Number one, it's on top of one of our major key levels. And I'm going to go to a weekly chart really quickly for this one. You can see right here, this is the dollar. We've had a couple of really great levels here. 92 has been a phenomenal bounce level for this one. The one time it got below it, it dropped into our last ditch effort of support, which was this 88.5. That's the one that had to hold or everything was going to fall out that one time. It held very well. The April monthly market outlook, at that point we talked about that being a phenomenal opportunity for this thing to rally back toward the 101 to 102 zone, and we got it. It took 2.5 years, but it made the move. Now we're back to the 92 level. 92 level, right? This has been a very good level. You're seeing another, this little range right here that developed, that built the energy to get the move going higher. We're seeing another one of those ranges develop right now, where you have a really good narrow range here between 92 and 95, and it's happily trading in that distribution. If price can start popping above 95 here, it opens up again another move into 101 to 103 at the top end of this range. So we are right back at the spot where we've kind of been before, where this thing could lead to a very nice move higher off that 92. If we drop this thing back into a daily time frame here, sell signal right now, but you can see how strong the rejection was on that 92 low. Very, very strong on that 92 low right there. That again is still the major low to watch. And while we do have a very clear resistance up here, if it can get above 94.5 and especially 95, it opens up the upside. Now if we take a look at this from a seasonality perspective, we can go to standard and go to seasonality here. Then I'll come over here and make this a show prices percentage. One thing you'll notice about the dollar here is it tends to rally into the end of the year. Not only that, it tends to bottom out right around August. So there's the bottom, typically speaking, or thereabouts, and this is the bottom this time around. A little bit of a rounded behavior here, and then it tends to rally into the end of the year. And if that's going to be the case here, we could be looking at a push higher into the end of the year. That takes us back toward 95, 96, and perhaps even higher. So seasonality with regards to the dollar is bullish heading into the end of the year, typically speaking. This is looking at a 5-year look back. So over the last 5 years, this is what the tendency has been. The tendency has also been for an August low, and that's kind of what we saw here. Now we've seen a kind of a deep pullback, one last pullback before it starts perhaps heading higher. So this could be an end of year candidate based on seasonality that could be headed higher into the end of the year. That's the dollar. Another seasonality candidate here is natural gas. Nat gas. With nat gas, right now we've seen an explosive move here in NG over the course of the last month plus. There's been some rollover gaps that helped price kind of get up there as well. But one thing about NG is that this one tends to be bearish from November into March. Usually it's kind of bullish coming out of the summer. You can see here starting usually around August, it tends to head higher into about November, mid-November, and then it starts to peak right around mid-November and starts to drop into the end of the year. But not just into the end of the year, also at the first quarter or first 2 to 3 months of the new year. So usually, again, from November to about March. You can see March here, that's the bottom part. So right here you tend to see a drop that starts in November. That drop tends to continue into January and February, and then tends to bottom out somewhere in March and April before it then starts to try and bounce higher into the summer and into November. So this is another one here, and you can see very strong top right now. We're not even into mid-November, but it's already given us a very strong top. Is the top in right now for this one, and are we then going to see some weakness here heading into the end of the year and into the first couple of months of next year? So the next 3 months could be bearish here, 3.5 months for nat gas. And again, if we take a look at this one from a 10-year perspective, let's look at 10 years here. Here's 10 years, kind of smooths it out a little bit, but again, here it is again, late November. You start to see the weakness. You look over here in January, it drops into about March. So again, this could be a pretty significant pullback here on a seasonality basis. Now again, if we go back to the daily time frame here, just the normal daily time frame, you'll see that strong top that occurred up here. And that's what you're seeing on that seasonality chart. You had a buy candle here, a strong move up here, and then yesterday slammed, or last couple of days slammed, and then pullback here. That's a pretty sharp turnaround. So now if we start to see a lower high, right, if we bounce a little bit into, say, the middle of November, any lower high here could then be played for a push downward. The other thing you'll notice is based on this chart here, which is a 5-year daily chart. There's your volume profile. This is value. The top of value is that gray line right there. And as soon as it closed above it, it got crushed. And now, if you have a lower high or some series of lower highs here, it could take value offered, and we could be headed down to the bottom of value here around 2.2. So this one is another one based on seasonality, but this is a bearish candidate that could be headed lower heading into the beginning of next year. Another one we want to look at here based on seasonality, these are two candidates. It's the Lowe's and Home Depot play, big box stores. Lowe's tends to be bullish into the end of the year. It's something we talked about last month Let me grab this again and go show percentage. So if I bring this down a bit here, this is something we talked about last month as well. What you tend to see is a strong low develop here on a seasonal basis for Lowe's and Home Depot. It's usually the last week of October and the first week of November. You get a strong low, and then you tend to rally into the end of the year. It's a very good seasonal tendency in many cases. Well, here we've gotten a strong low almost to the day, almost to the average day, right? So that's the low from this year, and the average low comes usually just before it, maybe a day before it or two. So I mean, it's right in line with the seasonality. And then look how strong the spike has been already to begin the month. The first few days of this month already very strong, and the move likely has begun. And so this one is one we talked about before in November. We said, hey, there could be a good buying opportunity at the end of the month and beginning of November, but we might need a pullback first. And there was your pullback. Big pullback, a spike low, and now we may see this thing rally into the end of the year. It tends to go beyond the prior pivot high as well. And so this one could be a good buy candidate just based on seasonality heading into the end of the year. The other one that you'd look at is Home Depot. And you'll notice here Home Depot very similar as well. Finding a low usually somewhere in the end of October, beginning of November, and then a move higher into the end of the year. So already seeing a strong low here, already seeing a strong bounce, but perhaps there could be more upside heading into the end of the year. There's still 7 weeks left. So these are two seasonality plays that could still be in play and already appear to be kind of working out. All right, I wanted to talk about some key stocks here that many folks ask about. We'll go back to our basic view here. The first one is going to be Apple. And what I wanted to talk about on these, we're going to look at a lot of the big ones, right? Apple, Tesla, Netflix, Amazon, Microsoft, those types. Really the point in this is to show the key ranges that I have. The key ranges that look the part, that look like they're going to give us exactly what we're looking for. This is a strong low in Apple here that came in off the 89s. It rallied to a strong high of 138. Then it pulled back to the midpoint of 113.63. You can see here, that's the level, and that's the level. You pick that low, that high, that mid. And this gives us our blueprint and our framework to work off of. And it gives us our targets. So again, based off this impulse move here, based off the energy that's being developed in here, we may be looking at a move that takes us as high as 186.70 down the road. Right now we're trading 114.95. That's the last price of the day. But what if we were to kind of drop first? What if there was some flush, right? I'm always looking for the flush first. If this is the target, sure, we could get in right now and then see if we can get to that target. But what if there's a flush first that takes us, say, into 90? What if we come back and hit this 200 day? Or anything below 100 really, right? What if we got anywhere below 100, between 90 and 100? That theoretically would allow us a chance to double this price. 90 takes you to 180 as a double, and we have a target at 186.70. So really you can get between 90 and 95, and you'll be able to double this to the upside target of 186.70 sometime down the road. So that's tremendous right there, especially when you're talking about a big stock like Apple, to be able to double that and do it fairly expediently, perhaps. Obviously, that's, over here was just silly season. You go 55 to 140, right? That's a huge move. You're basically nearly tripling that at that moment. But now this is building the energy for the next train, right? It's fueling it up so that we can make that distance move to 186.70. So this is the key range I'm using. If price were to drop down here, say around 90, that could be an opportunity to double this thing from 90 to 100. Another one to look at here is Tesla, and you'll notice the exact same key range. The exact same key range. There's a couple of them that you can mark. You know, this one could be marked from here up. That's the way I marked the Apple, and it gave us a farther target. For this one, I marked from here down and the snapback, so it gives us more manageable targets. But notice how it stays inside the middle 50% of that range. That 25% becomes a buy level, the upper 25% becomes a sell level, and it keeps it inside the trading range here. It's building the energy. You can see the bump coming out here on the profile, and eventually an upside move on this one takes you to 675. So 675 could be the upside target for Tesla down the road. Again, you could still be able to double this one, which sounds silly, it sounds ridiculous, but you could still theoretically double this one to 675. All you need to do really is just drop this thing right into this key range low. All it has to do is touch that key range low at 330. 330 gets you 660, and you have doubled. Now what happens if you get below the key range low? You may be able to trap somewhere between 300 and 330, and now you could be doubling to 600 and a 50% expansion target. I mean, that could be pretty tremendous. So this one is going right along the playbook with Apple as well, in that it has given us a tremendous key range to work off of for future price targets, and all we have to do is kind of be patient and look for the right entry opportunity. So this is definitely one to keep on the watch list here. If we were to drop down even as low as the key range low, that could provide a great double down the road into this 675 target, 600, or any of these other ones. So this is one that's clearly building energy and has the potential to explode to the upside. I'd be remiss if I didn't also mention that we could easily drop all the way down to the bottom 100% target, right? If we were to fail to hold 330 and then we can't get back above it, then we'd be looking at our downside target. That's 157. Again, I don't know if we get back that low, but anything can happen anytime in the market. We've seen that literally happen this year. It's always been something that, markets can do anything at any time, even if it sounds ridiculous. And this year we definitely put that through the test, right? We've seen these markets just collapse under COVID. We've seen crude oil go to -40. We've seen the incredible happen. So anything can always happen. Just always keep that in mind. But with regards to these key ranges here, it gives us great boundaries to watch. And now just be patient and look for the upside targets to be reached sometime down the road. So this one's a great one that's building energy and could be due for a move to 675 sometime Q1 or perhaps beyond. Netflix. Look at Netflix. Another key range, a great key range. You have solid impulse low, solid impulse high, key range, and again, look at the lower 25% level, just so good. Upper 25% level, seeing some traps and reverses. This is a ton of energy being built up here. Now, this one looks a bit different than Apple and Tesla. This range looks a bit more distributive. It looks like a distribution a bit more. So that is something to keep in mind. And a distribution would be when price has marked up, and once it's gotten high up here, you tend to see distribution, which is anyone who have been long up here is now selling, but keeping it in a range. Whoever bought it here too high might be the last one holding the bag, and then you see a markdown phase to bring it back. If we did mark down, 400 could be a really good quick target for this one. 400's right here. right there. You can see 380s right here, and that's kind of that zone here where it was the upper end of the range. The transition was here. It's holding here. So if this is distributive, perhaps we make a move down into that zone. And then from there, bulls really need to hold that zone to kind of get this thing going back up to 580 and perhaps the upper extensions. Now the upside target for this one, 718.62. Just call it 720 evens. 720 could be the next target up above for that one, which means 360 doubles. 360 is right here. 360 doubles. Again, this one could, because it looks like a distribution, it could lead to a a short-term markdown phase that could get us back to 400, 380, or maybe even as low as 360. I say if it does get to 360, that could be a tremendous longer-term buying opportunity to the upside 100% target at 720. So just longer-term ideas here for some of these, especially given the fact that these are super expensive now after the recent 6 to 7 month rally. Amazon. Amazon's up here as well. A key range. Now there's a couple of ways we can draw this key range. I initially drew this one because it finally gave us a range. This impulse sell-off here to this low and back up gives us a range as well. So it depends on how you want to mark that one. I do like this move a little better than this one, but they're both fine. For the most part, this one's pointing at 4,060. 4,100 even, right? So this one still has upside that could take us into 4,100. Now, if I were to mark this impulse range right here, that would take us a little bit higher than that. So this is looking at, what is that, 29 to 36. And it takes us, right in that zone still, a little bit higher. So it's not much more, but 41 to 4,200 could be the target up above for this one, and that's tremendous. One thing on earnings here, look at that number, by the way. You go from $5, then $10, and $12 during the pandemic is incredible, and it's only likely going to increase from there. So this one, I think one thing he mentioned, Bezos, there in the call, was that December is going to be unprecedented for them in terms of how good business is going to get, right? And that's a big call right there. You're seeing a gap up today. At some point down the road, this thing could finish easily at the end of the year somewhere above recent highs for the year, 3,600, and could be making a path toward 4,100, that upside target. So very good support on the lower end of the range down here. 2,900 has been significant. That LVN, which is on the other side of this D-shaped profile, if we were to get down into this zone somewhere between 28 and 2,900, that might provide a pretty good buying opportunity for a move into 4,100 down the road. So that could be tremendous there for Amazon. Another one here I wanted to talk about, this is LULU. Lululemon. Great key range here. So you're seeing a very good number of key ranges across the market right now. This is not something we've really had a lot of lately, because when the market is just very directional, like it's just trending up, trending up, trending up, trending up, you don't get key ranges. The way you get a key range is to get an impulse sell-off that's tremendous. It snaps back to the mid, and then you have the edges in play. But when you're trending, you don't get those tremendous sell-offs to create that key range. In this case, it did. September was the month. We were looking for a pullback on average of 2.2% for September, based on averages on election year, and we got a tremendous pullback that month. That is essentially what gave us our key ranges, and now 512.50 is the upside target for LULU. We're trading 340 right now. If price were to drop down into the key range low, Here's the key range low. Here's the 200-day. Anywhere in this zone, call it 280. 280 could be a good move for a push into 500 and beyond down the road. This one's building energy. Again, not sure if we get those pullbacks, but it is worth being patient to see if we do get some sort of correction here that could give us a very good beneficial buy the dip opportunity. That could be a tremendous squeeze back up. So 512.50 is the upside target down the road for this one. If we can trap somewhere between 260 and 280, that could be a double, right? 260 gives you 520. So that lower 25% level right here could be what does it there. So again, can we get that low? I don't know. Right now we're just kind of building out in the middle. We could easily just break to the upside and start running, and that would be fine too. At least we have directional conviction and we have those upside targets in play. LULU, now it's Microsoft here. Again, Microsoft been very similar to some of these other tech stocks, very bullish. This one's been building up at these highs, and I don't have the new key range here. Don't really see a great one. Obviously you have this impulse rally with a pullback, so that's probably it here. Basically 200 to 230. I mean, that puts you at about 260. But this key range from back here is still in play. So that's why I haven't really done anything with it just yet. That low to, or that high to this low and the midpoint, we have a target that takes us to 250. So we're not done with this one. Clearly this one has gone sideways the last 4 months. And we have 4 months of energy being built up. That usually leads to expansion at some point that could equal that time duration. So 3 to 4 months of trending price action. If it's to the upside, easily 250 could be ahead. One thing about this one, again, would like to get a good key range in here, but this one's almost done, and we'll see if we can get that 250. So this one's still building the energy. Again, looking to the lower edge down here, 190 might be a good in. If it were to drop into the 200-day or trap below the 200-day, it could be a great final push into 250. Not quite the percentage gain of some of these others, but this one's been very reliable here lately. Over here, for example, here's the 200-day, and there's the trap below the 200 and the rally to the upside. Again, can we get a drop down? Can we get a discount below the 200? Between 180 and 200 could be a great trap for a pop higher. Another one here to look at is Square. Square has been trending nicely higher here for a while. You can see from these lows, oh, wrong button there. From the lows here we've had, what is that, 30 bucks, and it rallied as high as 190. Just tremendous, just tremendous. And recently here we did pull back into the lower boundary of that range. This was something we were talking about earlier in the week as one that will likely continue to remain in the range until proven otherwise. Today, huge gap up and run. It was up today 8.25%. The move is probably already beginning. This is a short-term idea to bring you to a new high here. So you're really just trying to get this thing back to retest this high, maybe push a little bit beyond it into 200. Again, a channeling stock that has pulled back. You got your counter trend wave here, and then you got your aggressive breakout move to the upside. The other thing you saw here, 2 rest days right there, 2 digestive days, and then price was able to explode to the upside through those days. Again, even if we were to drop down into 160, it could still likely be a continuation toward 200. So on the short-term basis, this one looks poised to retest the high near 190 and perhaps grab that 200 price tag above. So this one's a short-term buy candidate for a move back toward recent highs. We talked about Zoom a little bit earlier. That's very similar here. I don't think we need to cover that one right now. And then TDOC. Now TDOC this one has two key ranges that I wanted to follow here, and I'm about to knock one off just to keep the more recent one. You can see over here we had this great key range. You had a couple of bounces off the lower 25% level, and it rallied to the 50% expansion. It got trapped above 50 and broke, and now it never reached this 100, at least not yet. Then we came over here and sold off here and reached a midpoint and gave us a new key range. So that's the one that I'm going to work off of. So what I'm going to do is I'm going to take this one off here, delete that one, and now we have this one on the right. This is a really good one. Again, notice how price has held in the middle 50% of this zone. Notice right here, as soon as price barely put some prices below that key range low, it was trapped, and those are the lowest lows we've seen so far. Building energy right now, and is currently on the downward flow at the moment. At some point down the road, this one could be a $324 stock, but does it flush first? Can we get a flush first? Can we test the 200 or perhaps drop below it? If we can drop below 200, say into 160, 160 would be a route right here. Man, that could be a great trap below the 200, and 160 doubles you to 320. So that's one to keep an eye on from a longer term perspective. Again, TDOC is one of those stocks we had as a buy candidate as a COVID buy back here, because this was going to be the way to go. If you can't go see somebody in person, the quickest way to do it is over the phone or over video or Zoom or whatever they do. And this is a great way to do it. I don't think this is going anywhere anytime soon. So if we were to drop and get that flush, it could be a tremendous longer term buy into that 320 target. Now here's a couple of short term ideas. These were all longer term, right? Those were all bigger, longer term ideas that I wanted you to have on your watch list with major upside targets. And if we were to see that entry point at some point down the road, there could be some tremendous gains there, right? Doubles in many cases. Now these are shorter term candidates. Twitter is a 3 to 5 or 5 to 7 day opportunity here. This is one that has recently seen an impulse sell-off. You see this right here, that is your island reversal. It got crushed and whacked on earnings, and then price closed below the previous month's low here. Yesterday we talked about this one as being a buy candidate whenever price gapped up above, trapping late sellers, and then rallied back to close above the previous month's close and previous month's low. I mentioned at that point that the trap is likely in, the impulse sell-off is likely done, and we likely snap back to the midpoint of that range. The midpoint in this case is 45.93. So 45.93 is a magnet, so just call it 46 even. Twitter has a very, very high odds chance of reaching that 46 here based off that strong low. The way it reacted today is exactly as we would have expected, which is to say it opened strong, it dropped early in the day, it found support right at the low of the previous month, right at the midpoint of yesterday's range, and was able to close back above the previous month's close. Rejecting that zone was very bullish, and then it closed on highs. Very, very strong. The idea heading into tomorrow would be, if any pullback occurs into 42s or that 41.86, that could provide an entry opportunity. So call it 42 to 46. You got a +4 that could be ahead for Twitter into that zone. Again, that could take place over the next 5 to 7 days, 3 to 5 days, somewhere like that. Normally 5 to 7 days would be about what I'm looking for. This was already day one. Perhaps another return here, and you're walking your way up to this zone up here. A great way to go here, buying the 40 in the money calls. You could sell a put spread, right? There's several ways to go about it, but the idea here is that the low is likely in. They trapped late sellers below, and now the squeeze is on. And after the impulse sell-off, you come back and you get that midpoint. Once you get that midpoint, we have our key range, just like all the other stocks we just saw. And when you have your key range, you can now start looking outward. And outward here, down the road, shows us a 67 price target right there. 67. So again, not only will this thing likely bounce to 46s, but after some action here, we might build up and eventually reach 67 down the road. So this is a developing key range. I call it a developing key range because it hasn't hit the midpoint yet. Once it hits the midpoint, it cements itself as a key range, and now we can work toward targets on either side. So right now, this is a short-term swing with a shot to reach 46s. Another one here is BSX. BSX is a short-term buy opportunity as well. You can notice right here that BSX is holding right here on this support right there. That's 33s. Tremendous support. 34 right here, another zone. And one thing this thing likes to do is bounce off that area and then form higher lows. It got down here, bounced, and higher low. It got down here and bounced, and now higher low. And typically speaking, when this thing bounces, it goes back to about 39 to 40. So not even looking for a big time new high or anything of that nature. We're looking for a bounce back toward about 39 or 40 on a short-term basis. The other thing is strong high, strong low. This is a great failed new low right here with a buy signal. Again, 35 would be the entry price tomorrow or thereabouts. And if it can continue to hold above 35s on a closing basis, it has a or 34s, right? If it can continue to hold above 34s, it has a good short-term shot to bounce higher. From that impulse high to this impulse low, this is the midpoint right there. That midpoint comes in at 37.64. So 37.64 is the upside target. That's a high quality, high odds target. And then once you get that key range, it's set. And then you likely have a little bit of overflow that can take you into 39 or 40. Additionally, if you're looking at today's low, if that's the low still, you can point higher to 39.39 to 41.11 here as your upside target range based on average daily range over the last 10 months. So really good move there underway. Boston Scientific, if it can continue to hold these 33s, it has a shot to rotate toward the upper end of the recent range and reach that key range midpoint. This is Plug. Plug. There's only a few more candidates here that we're looking at, by the way. Plug has exploded to the upside. Look at this right here. That was the day. That was the day where they turned on the lever and said, okay, we're buying this bad boy. And up, pull back and up, pull back and up, pull back, and now starting its next wave up. Failed new low today. Price dropped pretty significantly. It dropped back below yesterday's low. It dropped back below, I guess that was just the previous low there. Back below even the close from a couple of days ago. And then it turned around pretty sharply. Closed above current day's mid. It looks the part. So this one, if it can continue to hold 16s here, it has a good shot to continue to the recent high of 19 and perhaps reach a little bit beyond that into 20 to 21. But the waves on the upside here have been pretty tremendous. So it wouldn't surprise me if we go over 20 by a little bit here. Say the 50% target to the upside would take you to about 22. So this one could be a 16 to 22 type of play if everything remains intact, right? By that I mean the trend remains intact, the higher value relationship from here to here remains intact. This is the buy the dip opportunity. We may be looking at a 16 to 22 move here the rest of the month. So that's a short-term buy opportunity there for Plug. And two more candidates here. This is going to be on the short side. This is Biogen. This range right here is just silly. Look how wide range, how wide of a range that is today. Plus 44%. Look down here, it's a 120 point range for, oh no, that's a 5-day range here. Let's drop this down. If you drop this down to 1, we can quantify the 1-day range. And the 1-day range is 112 points. 112 points. It's likely the biggest 1-day rally that this thing has had. But one thing we talked about in our trading room today with regards to this one is many times when this one pops like it does, it tends to fade back very, very quickly. Even in the very, very next day. Like the lotto was hit, and now you cash in your ticket. And over here you can see 360. That's about the top end of the range. You get to 360 after it pops, and it drops. Over here it pops, it drops. Even this was a huge day right there. It popped up to 360, 370, and then it dropped all the way back out to take out those lows. So this one is one that may see a pullback as well, perhaps back to 300 or something of that nature. But again, anytime you get a huge spike up, there is a tendency to start fading back in this one, and it could take us quite a bit down. I mean, it usually takes out the entire gain all the way back down when it spikes. So this is one to keep an eye on. If it can't stay or can't get above 360, can't stay above 350, there may be a good opportunity to sell call spreads here or buy a put spread. But the idea is to fade this back after this spike. Now, if price starts to open up and is shooting through 360 tomorrow, you know, again, you got to wait for the right opportunity here. But for the most part, when it spikes like this, it can tend to be a fade opportunity. The last one here is GILD. And GILD here is a short-term short opportunity with a long-term buy opportunity attached to it. GILD, Gilead Sciences here, has traded around a 61.5 level for a very long time. This level is one of the most reliable levels of any stock that has been around for the last 3 years. 85 is about as reliable as an upper end as you've seen, between 85 and 88. The low end has been 61.5, and it's just been such a reliable level. I played this level so many times, you know, during 1 year at least. I didn't play it this year, but you can see that it is now below that level. These are 5-year lows, and it's below that level. The other thing you'll see right now is just the aggressive downtrend that you've seen here, right? Lower value relationship, lower value relationship, lower value relationship, lower value relationship. And when you're in a lower value relationship, the goal is to sell the rips. If price bounces into the pivot range and gives you a sell signal, it's an opportunity to sell it for new lows. So this one is likely a short-term sell opportunity to new lows, but here's the long-term buy opportunity. If this sell signal fails, and say we get a higher low, or say price pushes through that midpoint tomorrow and starts to push back above 61.50, then anyone down here likely got trapped, and if it starts to push above 61.50, the squeeze is on, and now we're working our way back inside the range. So this is a tremendous market structure level right here. That's a tremendous market structure level. So to get this deep below it is tremendous, and to see this rejection occur could easily lead to more weakness. But the strength of the 61.5 has just been so strong. Look at the last time here that it was below it. It snapped back above it and quickly was trading back to 70. 70. 70, right? If we were to get back above 61.5, it's a clear path to 70. So this is a short-term buy opportunity, or sorry, short-term sell opportunity with a longer-term buy opportunity upon a squeeze above 61.5. Again, right now you got to go with the current structure of this trend, and the current structure suggests to sell right here for a shot at new lows, and that's just it, right? 5 to 7 days down. I mean, you're not looking for this thing to melt down and drop way down here. You're just looking for it to drop below 57s, and that's your gain. And if there's any rejection ahead of that level, this thing might turn around and take out that pivot high, and now the squeeze is on back toward 70. So that could be a tremendous candidate here. It's had huge selling pressure on it lately. And another thing here, this was a distributive kind of range here, big distribution, all this distribution, and then it led to that markdown phase. At some point, the markdown phase will end, and then we will embark on a new mark up phase. So above 61.5 opens up 70, and perhaps even returns price all the way back to the 76.60 where it broke down from. All right, that was quite a handful of charts and candidates that we looked at. A whole lot of great ideas from long-term plays, lots of long-term plays that could perhaps double down the road, short-term swing candidates as well. We looked at some seasonality ideas with regards to nat gas, the dollar, also the big box stores, Lowe's and Home Depot. A lot of great charts there. Again, I will have this recorded and posted for you all to replay and watch at your own time later on. As always, I want to say thank you all very much for attending the monthly market outlook for November. Again, my name is Frank Ochoa, author of the book Secrets of a Pivot Boss, and also I run the PivotBoss Premium Trading Room. You can go to pivotboss.ecofin.com if you want to learn more. Everyone have a fantastic night, and I'm looking forward to seeing you in the trading room soon. Take care, folks.